Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, November 22nd, 5:18 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Very happy Thanksgiving to everybody out there. Looking forward to the day off, and the markets trade a half day on Friday, so we'll have an early edition of the Friday edition of the Market Insight video. And a reminder, my interview with Richard Moglen, I should say my interview of Richard Moglen, will be available out on our YouTube page, and you'll also get an email Thanksgiving morning. So state of the market, we're in an uptrend since the follow-through days on November 1st and 2nd. Checking the trend gauge, we've got the green arrow on leadership. Many leaders continue to act well. Short term, all 5 of the major indexes are trending above their 21-day exponential moving average, green arrow there. Same thing with our medium term trend 50-day moving average. Long term continues to be the mixed bag. Big cap index is firmly above the long term 200-day moving average. Mid caps with multiple closes above there, but the slope of the line is still headed down, and small caps still below the 200-day moving average. So what happened today? NVIDIA reported earnings last night and opened about flat. It had a big range right out of the gate, but looked bullish. Worked its way above 500 early, had an ugly sell-off, but little by little crawled back, ended up down 2.5% on the day. I consider it a win for the stock, considering the run that it's recently been on, and also the just fantastic numbers that they continue to put up. So we did add to our NVIDIA position today. We are cognizant that we've got a saying, and it's really one of O'Neill's rules: you buy on technicals and fundamentals, but you sell only on technicals. And if NVIDIA breaks the 200-day moving average, we'll be out with our most recent buys. But stocks, it's happened throughout history that the fundamentals look best at the top, price starts to fade, and the fundamentals catch up to that price a quarter or two later. But this is a bull market. And the numbers look extremely strong into the next 2 years. So we consider NVIDIA a leader, and until it's not, we'll stick with that and add to the position the way we did today. So the gap up today faded, but we stayed green across the board. Leaders acted just fine. Here are the final numbers. The big 7 up 0.1% on average. 2 standouts to the downside, Tesla and NVIDIA. To the upside was Amazon. The RG8, this is our 8 growth ETF composite, up 0.56%. S&P 500 closed about where it gapped up, 0.4%. Equal weighted S&P up 0.47, so that's good for breadth. NASDAQ 100 up 0.41%. Equal weighted up slightly less. Dow up 0.5%. Mid caps up 0.6. Russell 2000 small caps up 0.7. Global diversified 60/40 up 0.2. In-house GROTECTION up 0.64 approximately. Let's get to some charts in the tail of the tape, and then we'll wrap it up and take a day off and see what the market has in the abbreviated session for Friday. But really, net, let's go to a 15-minute chart here. We saw this is the CPI gap up on the 14th, and then the tight consolidation for 3 days, which we broke out of. Had an inside day on Tuesday, the 21st, gapped up to higher highs, made higher highs early, but sold off right after that. And then another sell-off later in the afternoon. But tight action continues to be continues to be what we are seeing, but it's been an extremely strong run up. The pace of this will not continue, but good response after an inside day yesterday and higher closing highs, getting above this 45.41 level. Next, we take a shot at 4,600 and see how that plays out. NASDAQ 100 Very similar situation. We'll go to the 15-minute. There's the CPI day, the tight range, the break out of that range, pull back right to the top of the range, the gap up out of the gate, the fade, and then really the sideways action into the close. But we're making higher highs and we're making higher lows. That's the definition of an uptrend. And until that changes, we stick with it, doing a combination of some offensive selling and anything that we buy that's not working, some defensive selling. That's called watering the flowers and pulling the weeds. Here's the Dow, further advance above the 45,000 level. Here's the mid-cap index, multiple closes above the 200-day moving average. As I said, the slope of the line is still declining. We want to see that flatten and turn up. Declining moving average, 200-day moving average on small caps, which the index stays below. Let's go to the VIX. Lower lows on the VIX. Computes, we're seeing higher highs on the index. Hearing a lot of people saying it's getting very cheap to buy volatility as a hedge. We'll see how that goes, but the market has done its best work under this 15 level, as we've been saying pretty much all year. UUP, the dollar gapped up, closed at the bottom of its range. Let's look at a 5-minute chart here. So yesterday gapped down, progressed higher. Today gapped up, progressed higher, and then faded, but maintaining the gap. How did that translate to precious metals? Gold pulled back on the day, 0.43. Silver also pulled back, 0.46. GDX, small gain. We're watching this for an entry. Gold stocks look like they want to run, but we'll play it with NUGT, which is the 2-time leverage GDX if we decide to go that direction. Bitcoin continues to look like it wants to get higher. Wide daily ranges, but closed at the top today, right below that 19 level. You can see it's above 19. This corresponds roughly with the 38,000 level, up 2.3% on the day. Let's flip to bonds now. Mixed bag on bonds, but net, the broad index up 0.1%. TLT up 0.35%. That means net yields were down a bit. Here's the 30-year, down 0.72. The 10-year, down just a tick. Let's go to the tail of the tape. You can pause this, read the details. I'll hit the highlights. 16 days above the 8-day moving average on the S&P 500, 15 days above the 21. Before you panic and say that's a lot, we were approaching 50 days during the summer rally, 50. We ended up in the high 40s. Surely we'll break below the 80 MA during that streak. When we do, that'll be an opportunity to take some profits and some stretched positions that we hold. But until then, for the most part, we're going to let them run. I'll talk about one that we didn't let run today that we took the gains on. So as far as the sectors go today, 10 out of 11 of the big sectors up. The only one that was down was XLE, and it was down just a tick. So that indicates breadth to the rally. Regional banks stood out as being strong. Well, they did early. They faded a little bit, but really no better than the index. So that's not a standout at all. Oils started very weak. They exhibited a bit of strength. In fact, producers closed positive by the end of the day. Gold and silver did stay weak, however. So we did some offensive selling by trimming our Netflix position, not trimming, closing our Netflix position, and we added to NVIDIA. We'll go through all of these charts and a couple of others. Net, our exposure at a 1.81 stayed the same, and the bottom line, the gap up faded, but indexes closed green and leaders stay strong. Let's start off with Netflix, because why would you let a leading stock with relative strength at a new high? Why would you close that? Well, if a couple things. One, we meticulously track statistics, and although this is a fantastic move, it's just in sync with the SSO during the holding period. When we look at buying something, we ask ourselves the question: is it going to do 2 times what the S&P 500 is going to do? Not a lot of stocks do that during their holding period. That's how we identify the true standouts versus those that are participating in the rally but not quite keeping up, and those that are lagging versus what's going on with the index. So with this 18% gain, it's going to pull back, coming into a natural resistance area at this 485 level, and we just cashed it. There's plenty of other stocks in a bull market to take the place of this, but being double the S&P, we always do a combination of aggressive offensive selling and defensive selling. We've talked about the defensive selling that we've been doing. First, with Celsius, which just didn't work after we bought it. And then the standout laggard since we bought it was Lilly, which is just really going sideways. So those are the two underperformers. The two standouts have been the two that we bought right out of the gate on 10/31, 11/1, and 11/2. That was Netflix and CrowdStrike. We've trimmed CrowdStrike last week when it got extended here, and it's gone sideways since then. We got a half size on this, but Netflix we trimmed and then trimmed again. It can continue to go. That's fine. CrowdStrike, we'll see where we are with it as it approaches earnings next week. So let's go through the rest of the portfolio. This is in order of size. CCJ, great chart. This is doing about 1.5 times what the S&P is doing since we bought it. Lilly, we already talked about. Datadog, we're just getting started on this. This is doing about 3.5 times of the S&P since our holding period. DUOL, this is doing about 5 times the S&P since we bought it. And we've added to those positions as they continue to work. Netflix, we talked about. Crowd, we talked about. Meta is doing about 1.5 times the S&P since we bought it. NVIDIA, we just got into it a week and a half ago and then added today. It's in line with the S&P since the buy, and then we'll see where today's buys end up going. AMD doing double the S&P, also breaking out of this little cup and handle today. Interesting that with NVIDIA's earnings, the stronger stocks, AMD had a much better day than NVIDIA. DraftKings, we got into this a little bit extended. It's doing double what the S&P is doing, but it's extended above the proper pivot, so we haven't really added to that one. And then we wrap up with Microsoft doing about 1.5 the S&P, and Tesla, which we just bought yesterday, which had a terrible day today, and will be cut Friday or next week if it doesn't improve on today's session. So that's everything in the portfolio. A couple of standouts today that we don't own. Bellring Brands up 4% on an upgrade. Day 2 higher high after its earnings report. GoDaddy also got an upgrade. That just looks fantastic. Breakaway Gap really outperforming since its earnings report. SYM, big move up yesterday. Day 2 higher high today. Still in a base. And ARM, this is a chip design firm, was running big time today, pulled back quite a bit from this 65 level. Considering getting into this, we don't like to, generally we shy away from IPOs because of the IPO book that some Cancelim disciples wrote about how institutions really need to do their due diligence, et cetera. But ARM Holdings might not fall into that category because it's a reissue of a stock that was taken private and then brought back out public. So we may break that rule that we don't buy IPOs and take some positions, take a position in this. We're considering it anyway. Let's see, anything else stand out today? I don't think so. And with that, we're going to wrap it. As always, like to hear from you. Email is don@revereasset.com, or my partner Dan Stewart if you're interested in becoming a client. Dan@revereasset.com. Phone is 855-REAL-WEALTH. That's 855-732-5932. Again, a very happy Thanksgiving to everybody out there. And with that, I'll wrap up the video for Wednesday, November 22nd. This is Don Vandenbord with Revere Asset. Reminder, it's not how much you make in the markets, it's how much of that you can keep. Our flagship portfolio is named GROTECTION because it's designed to grow assets in uptrending markets and protect them during downtrends. We're certainly in growth mode now and will stay there